All right. Well, thank you for joining us here today for the sixth installment in addition here that we've been hosting on navigating the coronavirus economy. And we are excited to be talking about the idea of insurance here. And most notably, things that we've seen and heard pop up in the news and different media outlets. This whole idea of pandemic insurance has popped up. And so we thought, well, in addition to talking about pandemic insurance and talking about just your insurance in general and things you need to be thinking about, we reached out to an insurance expert with Heath Groves with the Program Insurance Group to give us his take and understanding of what it means, what pandemic insurance is, how it works, what's involved, does it make sense for my business or not, and other areas we need to be thinking about and concerned about as the economy starts to open up again and we start getting back to business. So with that, we appreciate you being here, Keith. I'll turn things over to you and let you take the mic from here.
All right, thank you, Tom. We're glad to be here. I'll first give an overview of the two businesses that we have regarding insurance and franchises is what we do a lot with in the franchise world. We do general liability or insurance for any business across the country, but we primarily focus, or my focus is on the franchising world. So we have Program Insurance Group. That's our independent agency. We're here in Texas. Like I said, we do insurance. We build programs for franchises or other groups that buy typically the same types of insurance to make it easier and try to get a cost basis down on a per location basis. And then we have Easy Cert Management. Does all the work for franchisors. It's a certificate tracking company that makes sure the franchisees have the proper insurance that's required in the FDD. We've been doing Easy Cert Management for about 6.5 years now. I came on board almost 4 years ago after I closed down my restaurant as a franchisee for a restaurant franchise out of Atlanta area, and then started doing insurance. I understood the franchisee side of it and said, well, I can take that and start doing the insurance for franchisees and helping them understand the types of insurances that are available. And you can see some of our clients that we work with doing the certificate tracking and the insurance programs for our Below Sport Clips, Great American Cookie, and the other brands like Hot Dog on Stick, Pretzel Maker, Marble Slab, Chocolate Smoothie, US Lawns, and Mountain Mike's. So as Tom mentioned, we are in an uncertain time of insurance. There's not really a lot of coverage available. We'll go into what is out there, what you can do going forward to look at your insurance or your franchisee's insurance. So, pandemic virus insurance, is it covered? As most people have probably found out, no, it's not really covered, especially on the business income, because that requires property damage. With a virus, there's no specific property damage to a business or a premises because it's just a virus. It was removed about 10, 12 years ago from policies and hasn't been covered since. Now, there is a type of actual pandemic insurance available that could have been bought, obviously previously to Corona popping up, and could buy going forward, but we'll get a little bit to that next. So what you can do now is review your coverages, adjust the sales estimates, revise payroll estimate for work comp. Those are kind of ways that you can lower the premiums because everybody's gone through a month and a half of lower estimates for sales. I was on a call the other day with Tropical Smoothie, and they're looking at probably thinking December before they get back to normal sales volume. So you're looking at another 8 to 9 months of adjusted sales that you're paying on an insurance premium. Currently, carriers' responses, they've been all across the board on what certain carriers will do. I'd reach out to your current carrier to see what they're providing and have available to you, your business, your franchisees, and say, hey, reach out to them. Some of them are giving our premium reductions or saying you don't owe a premium for a month or 2 months, we'll not cancel your policy. Where is this going to go from here? It's an unknown. Each state has, again, responded differently between the state and the carriers in that state. And you see lawsuits are going to court between some states, like New Jersey is going to court to determine the carrier should pay. There's two examples of what I see could happening. Again, it's going to be a couple year decision of what is probably going to end up resulting from this pandemic as to what happens in the insurance world. It could be similar to TRIA, which is the Terrorism Risk Insurance Act. It's an automatic additional premium on every policy that can be declined. Most people actually decline that coverage on their policies currently, but all that money goes into a pool. So if there was that potential to happen and you did purchase that extra coverage on your policy, there would then be coverage in place for that. Could we see a pandemic type of act passed by the government that says, hey, this is on every policy now? Each business owner has the right to reject that coverage and not pay the additional percentage based on the premium into that pool. That could be a possibility. Or we could go into a separate, again, straight up pandemic virus insurance coverage, similar to how we have active shooter coverage. A couple of years ago, that was not a coverage that was even thought of or heard of. As we now unfortunately know, that's more of an issue that we see on a monthly basis. And now it's a standalone coverage. However, it's not very cost prohibitive on a per location basis. One of our brands that we work with usually pays about $3,000 a month and a year in insurance. On a per location, the active shooter would also be about $3,000. So you're essentially looking at, they would have to double their insurance just for the active shooter coverage on a per location basis. However, it can be pooled together as a franchise system and getting a master policy to do active shooter coverage. And it comes down, that same example was just a couple $100 a year, where the franchisor buys it and just either pays for it themselves, bills partially to the franchisee, or bills all to the franchisee based on how many locations they have. So instead of $3,000 a location, you're looking at $300 to $400 a year per location. Again, nobody knows where this is going, what's going to be the result, as each state so far is acting a little bit differently in what they're trying to get carriers to do. If we were to see carriers respond, that's a whole lot of insurance premiums out of pocket they got to pay to cover pretty much everybody in the US, not just, and then Europe and all the other countries. Where's that money going to come from? Nobody knows right now. So what can you do going forward as a franchisee or an independent business owner? Kind of what we just talked about. Review your current coverages, especially as we're starting to get back open. I'm here in Texas. Today's May 1st. We were announced that this is the day we're starting to open things back up. Restaurants are at 25% capacity is all that they can have right now until the next update of moving forward. So we do have businesses opening back up. As we've been in this for a month and a half, some businesses might have canceled coverages. You would obviously want to get those back in place before you open. Again, adjust your set payroll. Another way, because we've been at this a month and a half, and again, it's probably going to be a couple months down the road before things are kind of back to normal. You'd want to adjust your sales and payroll for the year to make an adjustment on your premium. And then, are you missing any coverages based on your business model changing right now? Specifically, EPLI is one that a lot of people don't necessarily have or know what it is, but it deals with hiring and firing. Obviously, there was a lot of firing or layoffs during the pandemic. Did you have EPLI in place? If not, that could open you up to some lawsuits by employees or former employees of being fired or laid off. And then obviously going forward, hiring, not hiring, that's a coverage to look into. then did your business model change? We have a lot of restaurants that obviously went to delivery and takeout. If they didn't previously do delivery and they had a hired and non-owned auto policy, a lot of the carriers that we dealt with allowed that hired and non-owned policy to cover the delivery temporarily during this pandemic. So said, hey, we know everybody's going to do it. We don't need to rewrite a policy or a coverage just for this period of time. And we know they need to get some sales, so we'll let that hired and non-owned policy cover for this pandemic period. However, if you didn't previously do delivery, your hired and non-owned policy is only geared towards general business operations or daily errands, like going to the bank or going to the grocery store to get extra ingredients or something. So if you're going to move forward and add delivery to your business going forward, you would need to revise your hired and non-owned auto policy to include the actual delivery. Now the premium is going to go up because there's going to be more people out on the road, more chances for something to happen. That's something to look at. Same with another example of selling online. Did you go from a brick and mortar to, hey, we're closed, like a retail store, we need to start selling more online because of this pandemic, but hey, it's done pretty good. We're going to keep our online sales. Cyber liability is one you need to look at. So it just depends on how the business model changed for your business during this pandemic. If you're going to add those things, keep doing those things going forward, your insurance is probably going to have to change based on what you were doing previously before COVID-19 came about, and adjust your insurance to relate to now what you're doing or the changes that you made. Similar type area for moving forward for franchisors. Same thing, review the current FDD. Did the franchise system as a whole make adjustments? Example, online selling as a retailer or delivery for franchisees. Is that going to be adjusted through the whole system? Is that now going to be what the franchisees are allowed? So you'd need to update your franchise disclosure document to make sure those coverages are now in there and in place to make sure the franchisees have those coverages. Franchisors, errors and omissions. That's a big one for franchisors. Do you currently have it? Well, I hope you would. As it involves anything you do, don't do, say, don't say, promise your franchisees, or don't deliver to your franchisees. We are in an unprecedented time of how did franchisors respond to things? Did they promise things and then not do them? And then going forward, how are you helping your franchisees going forward? And now, as we're starting to see more states open, I think we were at 10 to 15 states just the other day who have started opening processes. As a franchisor, it's a really important time to make sure your franchisees have the required coverages that you have in the FDD. As we stated, some have probably canceled coverages. Some are adding new parts to their business, like hired and non-owned auto or cyber, if they're selling online. You would want to make sure their franchisees are prepared to open again with the correct insurance in place. So monitoring and tracking those certificates is extremely important. You don't want to have a new franchisee open up again next week, 2 weeks, 3 weeks from now, a month from now, and not have the insurance in place that they're supposed to have. So that kind of gives you a little bit of idea of what we're looking at. Just really look at your current coverages. Is it correct for what you're doing now? Whether it's adding a type of business model, adding something to your business model, delivery online, and then adjusting your sales, adjusting your payroll, because we're all in this unprecedented time where things are not where they were or where we expected them to be back when we did the renewal for upcoming year. We all thought 2020 was going to be a great year. A month and a half in, 2 months in, turns out we have to make a lot of adjustments, learn on the fly, and figure out where to go from here. So if you have any questions for us, whether it's insurance, whether we want us to look over an insurance policy or coverage that's in place, or say, hey, I added this to my business, what type of coverage is out there for me? we're more than happy to review that for you. We're here as a resource to the franchise world. My email's up there, both of our websites, PIG, BCS, and Easy Cert Management. We have blogs on both of them. Program Insurance Group, we have put out as much information as we've found regarding everything dealing with COVID-19, things to think about as a business owner or franchisee, and the types of insurance to look at, and or whereas to same thing we just talked about of what adjustments you can make during this time period to possibly lower your premium and maybe shop your coverages around right now in an effort to get that premium lower and everything covered properly. So if there's any questions, I'm more than happy to answer them now, or you can shoot me an email later with your questions so we can set up a call.
Heath, this is Tom. I have a question for some of our clients and people who might be attending. You mentioned certainly there's been a lot of changes and impact significantly to retail, restaurant, anything that's kind of a fixed location. What are you seeing or have you seen for maybe a business that's less dependent on fixed location, maybe a real estate company, or maybe a home services company, or even a professional services company? Can you give us an idea of what you're seeing in those fields?
So for the most part, at least the ones I've talked to in the home services, like pest control, real estate, home building, construction, they haven't slowed down very much because they already had things in their pipeline going forward. And months out, like a home builder, they're building out for months out. Pest control, they already have their normal pest control going, and same with real estate. The longer this goes on, obviously, that's their inventory, their booked products are going to change. And the longer, so right now I haven't seen too much of it in that regard, but it's the same thing. It's the longer this goes, the more the trickle effect is going to be towards them. They're going to face the same type of deal. It's going to be, they're obviously not going to sell as much. They're not going to build as much. They're not going to visit as many homes. I know my local pest control guy, he was actually just doing outside sprayings instead of inside in an effort to say, hey, we don't need, if you don't want us to come in, we won't come in. We'll just do your inside, your outside of your building. But he's still extremely busy right now and hasn't had any adjustment really to his sales as far as I've talked to him. The longer this goes, obviously more people are going to say, hey, I'm going to just push my pest control off a month, 2 months, because I'm not working right now. I need to try to cut some costs.
Well, and I guess my question really relates around their insurance. Or is there anything that a company in that space that they should be doing that's different from what you've suggested, or anything to point out here?
Not necessarily. I mean, I'd still just look at their estimated sales for the year. That's really the biggest area that they can make some adjustments to. Same with the payroll for if they have a lot of employees, is make the adjustments to their work comp to lower that premium. But a lot of them don't have buildings, especially real estate. They're working out of their home and doing that. So they don't have an office to worry about, and they're used a lot of the times independent. But no, there's not a lot of the insurance to think about in those cases right now, unless it's just, hey, we need to adjust our sales, need to adjust. I would look at their E&O if you're a real estate or in the professional service and have professional liability in place. I'd look at that to make sure your coverage is correct. To cover exactly everything you're doing, not doing in general. That's just another thing I'd just relook at to make sure it's the proper coverage that you're supposed to have as a real estate professional or in home services making sales type calls.
And Heath, what about, this is a question that's kind of come up here that I've heard people wondering about. Now as these states are opening up, like you said, 10 or 15 states are going to be open here, and more coming in during this month. As an owner of one of these businesses, Are you seeing any potential additional exposure or liability for, I'm sure it's there with the PPE that's supposed to be worn by your staff and employees, and have you seen anything from the insurance companies out there that are having certain requirements in place to be covered if there is an accident or something does happen at work, or liability insurance if an employee gets sick and now they're in the hospital for 2 weeks or a month, for work comp, or what? Do you have any sense, any direction of what you're seeing?
So we've actually had that asked a few times with some franchisees out of Georgia. That was one of the first states to open back up, with them calling saying, hey, I'm opening back up. What if I now get a lawsuit from a customer claiming they got COVID-19 from coming to my business? Which I'm sure is probably something on everybody's mind is, well, what happens now if we're open and people start getting sick again? From the insurance carrier response, and in general, it would be extremely hard to quantify where exactly somebody picked up the coronavirus. It's nearly impossible, because you could pick it up just going to the grocery store on a weekly basis as well. So to qualify where exactly somebody got it, who knows for sure? Our response to them is, go ahead, file the claim, let the carrier get their claims adjuster in, and go ahead and have them do their research and their prospect to see where it goes from there. As far as the PPE and following the rules, I would say as long as you're following your state mandated requirements of, hey, this is how you're supposed to open back up, this is what you're supposed to have in place, where, as I said, for here in Texas, restaurants have to be 25% occupancy, and that's to patrons. That doesn't include their kitchen staff and their wait staff. So they can only have 25% occupancy of actual customers. So as long as they're following the rules, they were doing paper menus instead of plastic menus to make them disposable. Everybody's wearing masks, everybody's wearing gloves, everybody's having their temperature checked on arrival, and then midday just to make sure their temperature hasn't gone from 98 to 102 between the course of the 2-3 hours that they're working. As long as you're following those guidelines that's set up by the state, I don't see where you could run into much of a lawsuit, because, hey, you're following what is released by the CDC, by your state. I had a call yesterday with another brand, and they had a whole huge opening page. Here's all of our suggestions for our franchisees. However, if it comes to a determination of which one to follow the state as much as you can. If ours contradicts the state, follow the state requirements and go from there as to how you're supposed to open, what you're supposed to do. So I just pay attention to the CDC requirements and your state requirements when they come out on what you're supposed to do opening wise. As far as a carrier response, again, there's not much going to be a response. You're going to say, file a claim in the first place, no matter what. Let the carrier determine how they're going to respond and go from there. Now, for the work comp, it's still going to be work comp, unless, again, it's hard if an employee, same thing we were dealing with the last month and a half, if an employee gets sick and turns out they get coronavirus, again, it's going to be really hard to determine where they actually picked that up. Now, in the medical field, work comp is applying because they're in it and around it on a day-to-day basis. So obviously there's a high chance that they did pick up the coronavirus from being at the hospital, treating patients and being around it all the time. As far as a server at a restaurant, how do you know exactly where they picked that up? So work comp's not really responding. Again, I'd file a claim. That's the biggest thing to do, is just, if there's a chance of something happening, file the claim, let the carrier then determine where it's going to go or how it's going to go from there.
Sure. So I think for everyone that's listening right now and tuning in, I think a really important point that you just made here, Heath, for all of those businesses that are going back, as Heath mentioned, follow your state guidelines, even if it may contradict or differ a little bit from your insurance policy guidelines. Follow the state. And I think secondly, if you are in a retail business or you do have to check temperatures, make sure you're recording that. Don't just take it. Take it and record it, even if you're writing it down, and then scan it or take a picture of it on your cell phone so it's backed up with a date on it, with dates and times. Make sure you have dates and times and employee names and when those temperatures were taken. It's really, really important, or whatever those requirements are. Take pictures of everything. We all have cell phones. We all have cell phones that we can take these pictures, and most of us have data that is backed up. And it looks like we had a temp here. Or, let's see. Do not record temp. You just created a HIPAA protected record. Oh, okay. So Michael, you want to talk about that? Are you familiar with that, Heath? This HIPAA protected record?
Because the only thing that I saw came out the other day was recording temperatures. I mean, I understand that as somebody brings it up as being a HIPAA requirement. As far as my understanding, I don't know, but that was what was brought up to me the other day, was what a brand that I'm familiar with, we don't do work with, but they're recording the temperatures and writing them down. I don't know if I would look at your state to see if that's one of those requirements for opening is recording temperatures. Because if the state's saying, hey, you need to do this, I'd probably defer to the state. But as far as being HIPAA, I am not even close to being able to talk about that.
So Michael, I'm going to unmute you here. Michael, why don't you go ahead and let us know what you think about that. So what are you hearing, Michael?
Hi, Tom. So the idea of taking temperatures is something that's been bandied around quite a lot. The guidance that we're getting, and again, state specific, whether or not temperature testing is going to be required is one thing, but recording the temperature creates a HIPAA record. It's a medical record that's protected by HIPAA. So the guidance that we're getting as a best practice is don't record the actual temperature, but rather kind of like a pass or a fail. So you'll set a benchmark as to what standing temperature is, and that, so Tom DeFore showed up for work today. It's May 1st. We took his temperature, and he was allowed to continue to work versus he was asked to go home. So all you've done there is created a record of basically a non-high temp, right?
I see. Yes.
But you haven't created a formal medical record.
Okay, great. Oh, that's great information, Michael. Thank you for sharing that. So really, it's either like you said, it's a pass fail, and either they did or they didn't, and you send them home if they do. If they don't, then they can stay. Okay.
There we go.
Great information. Thank you, and hopefully those of you who are listening here, listen to Michael here. That's great advice. Thank you very much.
You're welcome. I'm gonna go dark now.
Okay. All right. Other questions or comments or from our folks here? Heath, other thoughts, comments, concerns that takeaways for the folks that are listening in or watching?
Really, at the end of the day, obviously this has been an extremely unprecedented, tough, challenging time for all involved. So I would just sit down and review your current coverages. That's really the takeaway I can give as a final summary. Just review what you currently have in place to make sure it fits what you're doing, what you're going to do going forward, and adjust accordingly, whether it's your sales or your payroll or needing to add coverages because you've now made an adjustment to your business model going forward, as in adding delivery, going to selling online. And again, I'm more than happy to work with you, to work through whatever you need to add or look at, say, hey, this is what we're going to do. We're opening in 2 weeks, and this is what we've been doing. This is where we're going to keep this model, and say, okay, this is what we need to add going forward. But that's what I'd take from this is look at your current coverages, make sure they're correct for what you're supposed to have, and then what you're going to add going forward if you're going to make any adjustments to your business model.
Great. Well, this is great information and some great takeaways here. And just a reminder for the franchisors, I think Heath made a great point of just now more than ever, it's always important, but make sure you're verifying that your franchisees have the appropriate required insurance, that it's current. And, it's easy right now, especially for the independent small business operator, when if cash flow gets squeezed, the insurance bill is an easy one to just say, not right now. And all of a sudden that insurance lapses and a potential exposure begins. So I think that's a great reminder. And just as a closing, just kind of this idea of pandemic insurance, I just thought I'd ask you real quick. I saw an article was forwarded to this from a friend who sent me an article about what happened with Wimbledon, having pandemic insurance and spending, I think it was $2 million a year or something, or some large, it was a big number every year. And they actually have pandemic insurance in place. And so they what otherwise would have been disastrous for them, they at least are going to be able to have cash flow coming in through their insurance. So I guess, what are your thoughts on the idea of a pandemic insurance, really, especially as it relates to a small business? Most of our folks that are tuning in would be a small business in this situation.
Yeah, so that's the unfortunate part. It goes back to that active shooter thing. And then there's another one out there for the food industry. We had this dealt with a client, I'm blanking on the name of the coverage, but essentially somebody they bought a product that had hepatitis in it and people got sick. But that then affected the brand, not just in that location. Because of the news, it affected the locations in the states surrounding it. So trade restoration is part of the coverage. It's very cost prohibitive on a per location basis. Same with active shooter. We've had 3 occurrences in one of our brands that you would never think would be a chance of something happening like that. So it would probably be something as an independent location. It's really tough because, again, it's not an inexpensive coverage, and I would doubt that pandemic insurance would be inexpensive. I've never quoted it myself to know for sure, but Wimbledon's just paying $2 million a year roughly, or for their limit. I'm not sure exactly how much they were paying, but it's not going to be cheap. I would hope maybe it comes in the form of a TRIA where it's just added to policies and people have the right to accept it or not, to where it's a lot more manageable of an amount. But if we see this again, obviously we know how much is probably going to have to be paid out. Because you look at just the U.S., for example, that would have to be a very large pool of money that's sitting there waiting for another pandemic in probably another 8 to 12 years. It's about seems when they come up is 8 to 12 years on routine as we have another pandemic. So unfortunate for a small independent location, if it becomes a separate policy, I'd get it quoted just to find out how much it may cost you, what the limits are, what you get for it, and go from there, just to at least get a quote for it so you have an idea. Maybe if you're part of a franchise system, I'd push for your franchisor to get a master policy. Same with active shooter, if you're in the food industry, trade restoration for foodborne illness type coverage. Those are all that are extremely cost prohibitive on a per location basis. But if it's bought as a master policy, it becomes a lot more manageable per individual franchisee's location to now afford it. And look at it that way. That's about all I could say regarding that, because I would assume if it becomes a standalone policy, you're probably looking at a couple $1,000s just for one extra coverage. Now, I could be wrong, but who knows where we're going to go and what's going to happen with it.
Sure. Well, this is great. So, I mean, I think that the takeaways here are review your policies, review your franchisees' policies. As a franchisor, there may be some benefits on a larger scale to buy, whether it's called a master policy or some kind of a larger bulk purchase so that on a per unit basis, things come down. The cost comes down for insurances like the reputation management, active shooter, some of these very unusual types of events. But as a franchise company, or even a company that's thinking of franchising or just expanding, you want to be thinking about that these risks become real, and each additional unit that opens, the risk becomes more the chance of it happening becomes more likely every opportunity you happen, every location that opens. So just keep that in mind. And Michael, thank you for chiming in here about how to record and keep track of your staff as locations continue to open. It's kind of just a pass-fail situation here. We're not recording any health data specifically for the employees. So without any other questions, Heath, I'd like to thank you for being a part of this. Please, if you'd like to have things reviewed, Heath and his company have come on here and just offer their time to give us some information. So if you're looking to have your insurance reviewed or just get a second look, I know Heath and his team would be great. They specialize in all kinds of business insurance and franchise-specific insurance as well. They work with some rather large brands and small franchise brands and everything in between. So Heath, thank you again for being here, and we really appreciate it. And we'll be back next week for the next edition of Navigating the Coronavirus Economy. Thank you.
Thank you all. Good luck on the openings coming up.
Yep. Thank you.
All right.